Okay, sorry. Well, look, I think we spent most of this year in apprehension about Fed policy. And at periods like this, we can have a good relief before or after all of that apprehension. It doesn't change the fact that monetary policy tightening will alter the environment for investing and for the economy going forward. I would also just point to the fact that this has been a higher volatility environment. We're facing very large external issues that are driving the economy and markets compared to the usual amount. And in this kind of vol environment, I wouldn't take too much from 1-2 day moves in either direction as being decisive in terms of turning the market.
So, Subadra, let me ask you about the sort of word of caution Larry Summers published in the Washington Post last night, where he says the Fed is going to lead us into stagflation and a recession. How do we avoid that outcome? And do you agree with him that that's a major risk right now?
It's absolutely a major risk in the economy, although it seems unlikely that we'll go into an actual stagflationary environment. The curve seems to be communicating exactly that. The front end of the curve, 2-year yields are up quite dramatically. And then you have the 2-cents part of the curve flattening out. We got to as flat as 21 basis points in the 2-cents part of the curve. So that's the market basically saying that they're concerned about a stagflationary type environment because the Fed's going to have to respond to inflation by raising rates aggressively. That's going to push 2-year yields higher. But the back end or the 10-year yields are not really responding to the potential for higher growth over the longer run. So that's what the market's pricing in. I don't think that that's our base case scenario. I think that growth is going to be somewhat robust for this year. The question is what happens and how short the cycle ends up to be when the Fed's all said and done with rate hikes. Yeah,
Julia, a lot of the rhetoric is focused on how many hikes should we and can we have right now. And Larry's point is really that the Fed is way behind the curve and they shouldn't be trying to run this experiment of letting inflation go hot for a while. And it's OK if expectations become unanchored. And he said the Fed is supposed to take the punch bowl away before, everybody gets drunk.
Well, I mean, I think we need to look at the curve that Subadra just referenced. It's not like the pivot has been priced in. It's not like the Fed is, while they are at zero right now, effectively, they've already lifted off because the market is pricing in a whole series of rate hikes. And in fact, that has been successful in tightening financial conditions and re-injecting some risk premia. And so we've seen that over the last couple of months. So I don't think it's the right way to frame it. Markets are forward looking. They're pricing in a series of rate hikes. That's exactly what Chair Powell and the FOMC are going to communicate to us today, that this is the beginning of a series of rate hikes. And that's already priced in. So I think the Fed has already effectively lifted off. And we know from our clients that they're very closely also watching what they have to say, what Chair Powell and the FOMC have to say on balance sheet policy. That's another front of tightening. So I think the Fed is already putting a plan in action. I think it's sort of silly to say that. And now is it the right plan? That's the question. And I think what Chair Powell will say is they can do more, they can do less. There's a lot of uncertainty, so they're going to follow the data.
Steve, last question to you, and I'm sorry we don't have more time, guys, but hawkish or dovish hike, what are you sniffing out there?
Well, look, I think very hopefully they're going to at least give us some confidence that they're not giving up on this expansion. A lot has changed. Federal spending is down 22% in the year to date. They're going to talk about a large series of rate hikes, quantitative tightening. Look at last year. We've never been able to stabilize inflation in periods of war or shocks like COVID. I would hope they're going to recognize that they can't control everything. And this will not be a year of on-target inflation.